Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything that you need to start your trading day.
Good morning, traders and investors. Welcome to this Wednesday edition of Benzinga's PreMarket Prep, brought to you by Thinkorswim. I'm Spencer Israel, as always, here with Joel Elconin and Dennis Dick. On today's show, biggest stories for us this morning are a Jeffries note from Sarepta and this news out of China that GM may be facing some legal action on the China front. So we're definitely going to talk about that and how it relates to GM and Ford. Two guests on the show today. First at 8:15, where we're joined by Harlon Pine, the founder of Amazing Power Patterns. And then at 8:35, we've got Tommy Lackey, managing partner and portfolio manager at Relativity Capital Advisors. Joel, how are we doing in the S&Ps this morning?
Very tight range overnight. Barely 4 points, 3.75. The all-time closing high, 2267.75. That's your bogey on the upside. All-time high, 2273. Pre-market low, 2265. Not a lot of support in there. You have Monday's interday low or Tuesday's interday low at 2259. Crude taking a break here, down almost $1. Gold and silver trading in the green. Dennis, so for pre-Fed decision Wednesday, we got a little action going in the markets.
GM and Ford getting crushed here this morning. GM especially here, coming out last night. It looks like China's going to fight back on Trump here. Spencer, what's the headline here that is driving GM down 3.5% this morning?
Well, GM China Ventures is said to be under an antitrust probe, and they're being warned of an anti-monopoly penalty. This is, of course, on the heels of Trump questioning the need for a one China policy out in Asia. So maybe a little backlash for that.
You wonder if there's going to be more backlash here, because Trump, obviously, pro-American here. We're going to, not allow any of the, foreign, companies to be shipping in. Well, if you start seeing backlash like this, and now they're going to stick penalties on shipping vehicles into China, this could get interesting all of a sudden. And GM's taking the brunt of it here, down $1.50 almost this morning. We're trading $36 here at GM.
And I am just waiting for a text from Lisa regarding this, because this is totally anti-Trump policy here.
For sure.
Yeah, I mean, it's just a direct response before he even does anything. But what we have to look at is the implications here for GM today. Just an amazing run since the election. We went from 30.21 into the middle 37 handle, so you had basically a 7-point rally. You had 3.5 on that. That takes you back to the 35.5, 36 area. That's where we're trading right now. Boy, oh boy, Dennis, I'll just give you the pre-market low. Pre-market low comes in at 35.76. I really don't see any major support until you get down to that double bottom at 34.91.
Now, it's a big pullback in here in GM. I think some people, some institutional money managers might say, oh, it's a nice buying opportunity. Obviously, how do we know how much business we get from China, Spencer? Do we have a chance to look into that yet? Just curious, on like percentage of sales, how much of, General Motors sales actually come from China.
I can tell you that GM sales in China for November increased by 7%. So they recorded about 370,000 sales in China. GM did.
Just in November. So
Yep.
We're talking a significant amount. We're talking that they sell some vehicles over there.
3.4 million for 2016. That's an 8.5% increase.
Okay, so 3.4 million vehicles potentially looking at getting taxed, or potentially, we don't really know exactly what's going to happen here yet, but China fighting back a little bit. Not great news, but I think your money managers might look at this as a buying opportunity, just because both of these stocks, GM and Ford, have both been hot. I mean, if you jump onto the Ford chart, we went from 12 to over $13.20. Now we're back here at $12.50. You look at the dividend on it, 4.8% here now at $12.50 this morning. I think you might see some people buying pullbacks on this, and I might be one of them. On Ford, I'm not sure about GM. This is the one with the news, but I think on Ford, I might be looking at a pullback. I might be buying this pullback today.
Looking at, I was a little off. The 50% of the GM does not come in until around the $34 level. I see a trio of lows there. I don't know. I just don't like the air on this thing on the way up. I think this thing could really get hurt today. Just look for that opening print. Boom. If you open it up above the pre-market low, you hold. But man, there's 36 and above. There's still a lot of people sitting on a lot of profits here from the end of October and early November. So I'm not touching GM here on the downside on this one.
What about the bigger issue that I see here? And, we've already got some fight back here now from other countries, that are going to be maybe a little bit anti-Trump with their policies, where Trump's going rah rah. I'm going to, obviously, stop, and stop imports coming in. What if we start to see other countries stop U.S. exports going out?
I, Dennis, don't get me started here on this. I mean,
You don't want to go into this.
there's a lot of implications for this, but this is like the first thing, and I'm surprised. Well, you know what? Why don't Trump? He should just tweet at China. We're not going to do any business. You're fired. We're not going to do any business with you. I mean, you don't know what
Probably we wouldn't have anything in our stores then. Everything's from China.
I know. This is not good, and not just good for General Motors and Ford and it's any other company doing business overseas. I mean, no defined policy yet, but best we could do is just look at the price action and see what the street thinks.
What's crazy is I see this as a really bad headline overall, and S&Ps are flat. I mean, there's more implications than just the auto industry. And not only that, we've got oil down big today. Some of the financials are weak here. Why are the S&Ps flat again? Like, what are we rotating into? I got to go find out. There's got to be some sectors that are picking us up here. There always is a sector that seems to pick us up here. But S&P's flat on this news, that seems insane to me.
Yeah, well, as you're saying that, we are starting to taper off here down a buck at 22.
A buck.
Yeah, a buck. I think it's just
Okay, so we're gonna stop. We're gonna start taxing stuff coming in our country. China says basically. Well, we don't know exactly what they say, but implications here. And S&P's down a buck. Come on, I just can't understand it anymore. Like the S&Ps are so resilient. It just seems like there's just no way for it to go down. This looks like a bad headline to me. You had the banks yesterday, like a lot. It ain't that rosy out there, really. I know we're coming into Santa Claus. December's all great, but the banks, don't look. From the last 2-3 days, and we talked about it yesterday. We were saying on the show that I think the banks are starting to look toppy. And they had a weak day again yesterday. They're having a weak morning here once again. If you look at some of the cyclical, some of the stocks that have really been running, some of the steel stocks, those are significantly off the highs. Look at U.S. Steel. U.S. Steel got all the way up to $39. It's now trading 34.5, just quietly selling off 15% in the last 4 days. So they knew there was going to eventually be a pullback here. It's still, a bull. The stock's still way up from where they were. They were just a little bit overdone. So maybe it's just a healthy correction here. But I don't know. I feel like, we might have topped out on a few of these sectors, at least short term.
Yeah, I have to agree. I was just going to move into the steel stocks as well. U.S. Steel is backed off. AK Steel is backed off its highs. If you go to the daily on the X, man, it could be a little bit of head and shoulders top here. We can remember the last time it got up into the $40 area, what ended up happening. You ended up selling some stock up there, didn't you? That was a couple years ago, I think, or was it? When was the last time?
I almost got the top. I think it was $46 I sold my U.S. Steel at. And if you look at that little spike back up at 2014, the high was $46.55. And I don't know if I got 46. I think I got like 45. I was like $1 off the high, though. And then it went all the way back down. Should have rebought it 'cause it went all the way back down to $6. I did not get back in. Obviously, we're all back up here at 34 now. But I don't think anybody anticipated U.S. Steel going from $16 to $39 in the course of a month after Trump was elected. But incredible movement here for U.S. Steel. I feel it's still just a little bit of a healthy pullback here. You can't really say, oh, the bears are in full control here because we've run so far. But I'm just cautious here because, so many people have been, saying, got to get in these things, got to get in these things. It seems like it's just a crowded trade now, and it's coming off a little bit here. So I'm going to call it a healthy pullback right now.
Violin maker, the Fed announcement will be at 2 p.m. today, expecting a quarter-point hike. A half would be a shocker, but I guess it's all about their forward guidance, what they're looking at. I'm sure they'll just say it's data dependent.
Well, we don't know if it's going to be a dovish tone or a hawkish tone. We don't know if they're going to say they're one and done here, which I don't think they're
They're
going to
not
say. I
going to
think
do
they're
that.
going to be a little bit more hawkish, which would probably be good for the banks. The banks want to see a hawkish Fed. They want to see rates going up early next year as well. If they hit that this is a one and done, they'll kill the banks. So I don't think that's going to happen, though. I think they're going to be a little more hawkish with their tone. I think the market expects that a little bit here. So it'll be an interesting response. What I could say is, in all likelihood, you're going to see the bank stocks go one direction, and you're going to see the defensive yield plays, your bonds, go the other direction. So that's, one thing we could say. I don't know after 2 o'clock. It all depends on what that statement says and their tone for next year.
All right, let's move on here. We got a few minutes before we bring in our first guest of the day, and that's Harlon Pine. We're going to get to talk to him about some.
Harlon!
Yeah,
Awesome.
we got to get him in before the end of the year.
Okay, just a couple other notes here. Wells Fargo down significantly here this morning. There was some stuff coming after the bell there that, and I'll just go grab the headline for you here. Or Spencer, if you can save me, I don't have it up here. The Wells Fargo headline from after hours. Do you got that? Right around 4:30.
Yeah, it says from yesterday. Yeah, they said regarding the Federal Reserve and the FDIC, there is a regulator. They were the sanction for Wells Fargo, and it's about the living will stuff, the living will deficiencies. So they failed.
I don't understand any of that stuff.
They failed the regulatory living will test, is what happened.
Okay.
So
doesn't sound good. Anyway, I don't understand any of that stuff, and I don't care to understand it. But all I can tell you is on that headline, they hit Wells Fargo all the way down to the lower 55s. It is still trading the lower 55s here today, but you now have the other bank stocks following suit here. You've got J.P. Morgan at the pre-market down 0.5%, Bank of America trade down over 0.5%. Wells Fargo is leading the way. It's down over 1%, so it might be more relatively weak than the other ones because of that headline there. Again, there's still a lot of people who, have been trying to call, tops of these things, including myself. I think on pullbacks, there's still going to be buyers. I think Wells Fargo, I don't know about 55, but I think there'll be a lot of buyers at 54.
Yeah, boy, what a move here. This is a 15-point move since it hit 43.55. So if you take 7.5 of that, I mean, that takes you back to, 50 and a half, 51 before you get into any kind of retracement on this one. So, yeah, 54 may provide a bounce today. A lot of congestion at the 52 in consolidation. But, man, there's a lot of air between 46 and 52. It took care of that in 3 days. Very unusual trading pattern from Wells Fargo on the upside. Let's see how it acts on the downside, because everyone did not sell in strength here into these days, because now it appears going to be having to sell into weakness.
And as strong as the banks have been, we've been talking about the pharma, how weak the pharma has been, but trade is totally reversed. Pharma, banks going in an opposite direction here, because if you look at the last 3 days, the pharma stocks have really caught a bit. So money rotating again very, very clearly here out of the banks in the last 3 days, out of the stocks like U.S. Steels, out of the Trump stocks, and into the anti-Trump stocks, which pharma is all of a sudden an anti-Trump stock because of the Time magazine article. Anyways, Pfizer has been up 3 days in a row here, traded at 30.5 just 3 days ago. Now it's 32.87 here in the pre-market. Bristol Myers has caught a little bit of a bid. Gilead has bounced nicely. Nice move there for Gilead. 4 days ago, made a new low on the move. You could call it like a fake out there or fake down, because it made a new low on the move down to 70.83 and then reversed, and then it's been up 3 days in a row. Almost touched $76 yesterday. So this is, what we talk about, contrarian moves, and sometimes, it's good to go with the momentum, but you know what, it will turn eventually. And it turned 3 days ago for these pharma stocks here. And now, it starts to look interesting, because you got, the bank's not looking nearly as strong, and the pharma's starting to show some strength. So you're at the crossroads here. Is this just a healthy bounce now, and eventually, the sellers are going to come back into the pharma stocks, or is this, the start of a new trend? We don't know that yet. But as of right now, I've always, I've been saying on the show for a while, I'm very overweight in my own portfolio in pharmaceutical stocks. And, it hasn't been good. It hasn't been good since Trump got in. But, right now I'm feeling a little bit better about it, as some of these pharma stocks, they're very cheap, from a relative basis from where they were 2 or 3 years ago. The multiples are trading at, some of these are trading at multiples well under 10, where you look at some of the banks, they're starting to get a little bit more pricey. So market has self-corrected quite a bit. Might have overshot here a few days ago, and now it's starting to correct again.
All right, I just wanted to say, you know what this Gilead chart is looking like? We had Gil Morales on earlier in the week, and he talked about institutions like accumulating stock and large positions. That's exactly what this Gilead looks like here in this 72 to $75 area. Low of the move been 70.83. Long consolidation here. They probably bought more up at 77.5. So this one I'm going to take a close look at today, maybe for more of a longer term play. All right, 8:16. We're a minute late. Quick break. We'll bring in Tommy Lackey. We'll be right back.
Harlon Pine.
Oh, I'm sorry, Harlon Pine.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick, Spencer Israel behind the glass. And we have one of our old-time favorites coming on here, Harlon Pine, founder of Amazing Power Patterns. Harlon, how you doing on this cold Wednesday morning?
Yeah, it's going to get colder because I'm in Wisconsin, you're in Michigan, so guess what, guys? It's coming your way. So I'm doing great. I can't complain. Having a great time. Took a new part-time job. We got a lot of openings, and I think all of you ought to take note.
Yeah.
New part-time job.
Yeah, what are you doing, Harlon?
Yeah. Peanut vendor.
Oh, boy, he set us up on that one.
He did.
I did. I was thinking about it the other day.
Peanuts? I want to know if you sold your peanuts while the circus was in town when the financials
Well, you have to
popped
be.
out 3 days ago.
Oh, my gosh. I mean, take a look at the Russell. Take a look at the financials. Take a look at, like you said, U.S. Steel. I mean, how can you not want to sell some of this stuff? What's the old adage? Get out while the getting's good. Merry Christmas, Happy Holidays, season's greetings. Hey, take your gains. You don't have to take them all, but, you got to take some of them because you know what? The sun is always brightest at its peak. So I'm not saying this is the peak, but oh my gosh, it's looking pretty bright out there, don't you think?
That U.S. Steel going from 16 to 39, and then everybody's talking. Oh, they keep talking. You got to be in this thing. You got to be in this thing. Trump stock, Trump stock, Trump stock. Now it's 30.
Yeah, and how much of that is all euphoria?
It is all euphoria. I mean, I
right.
understand
What's backing it up?
How U.S. Steel is all of a sudden worth 150% more because Trump's going to be the president. I mean, I don't think things change that much. I think they change somewhat, but to say
the psychology probably, but I mean, nothing else. I mean, it's just right now it's just ideas and things he wants to do. The guy ain't even in office yet, and you've ran these stocks like it's already built in and already hitting the bottom line.
Yeah.
So are you going to multiple circuses? Are you working street corners? I mean, where you dishing out those peanuts?
Oh, well, anything that looks like, like you said, U.S. Steel a couple of days ago. I mean, oh my gosh, how can you not want to take those gains?
I just want to go.
Is it?
I'm sorry. I just want to go back here. Going back to April, this would be Q1 of 2015. I'll just give you how their percentage of how they missed their estimates. They missed by 150% on one report, 23% on one report, 290 on one report, and then they had a 71% beat, 75% miss, 40% beat, and 50% miss. I mean, what kind of
how can you plot an investment strategy off of that?
I don't know.
I mean, really, who writes that stuff?
I don't know.
Beginning of 2016, the stock was $6, and people on CNBC are talking about it going bankrupt. Now they're all talking, you got to be in this. This is everything. I mean, it's just the definition of chasing. chasing price.
And what
So many people
exactly?
do it.
And you know what? And you wonder why we pay attention to charts so much, because a picture to a chartist, a picture is worth 1,000 words. You can have it's all about the stock. What's the stock doing? Because ultimately, at the end of the day, it's what is the stock doing is what's going to make you the money. So, I'd rather pay attention to that, than what, some of these analysts say. I mean, how many times have we seen it? They downgrade at the bottom and they upgrade at the top. We've seen that so many times over the years. Why do you want to even listen to it anymore? And by the time they talk about something, it's already boom, the stock gaps up. Hey, we're upgrading it. Next thing you know, the stock gaps up 5-6 points. And guess what? That's a trade in itself.
Harlan,
I'd rather pay attention to charts.
And I want to get your charting thoughts just here on General Motors and Ford this morning. They're under significant pressure because there's some news out of China that China's going to start looking, at potentially, putting some tariffs or doing something, under the GM monopoly that they're talking about here, which broke, just overnight. GM is down $1.50 in the pre-market. Ford's trading down in sympathy here, trading down at $12.50. One thing and obviously you can look at all that, but just analyze it. Analyze the Ford chart for me here, because I'm looking at Ford and thinking, it's pulling back here, had a good move here. I'm looking at it as a potential buying opportunity, but I want to know what Harlan thinks.
Well, and here's the thing, this China thing, we say we're going to do this, and China obviously has to fight back. So it's like a couple of kids. You said this, so I'm going to get you. So it's like a couple of kids in a schoolyard. All right. Now, all that aside, what's the chart doing? You're right. It's pulling back. I can see a little bit of support at 1260. Draw a line because it broke out of there. But here too, Ford and GM in the short term, they're extended. And we've seen this time and time again. When you see these stocks spike like this, those are, I call them air pockets. And air pockets in market weakness, they act like gaps, and they tend to get filled really quick. So, the 50 days at 12. So, let the dust settle. I mean, it's the holiday season. Stocks are starting to pull back, and that's good in some areas. So, for me, I'd be kind of watching Ford and going, you know what? If it comes down to 12, if I really have to have it, if it comes down to the 50-day, it probably isn't going too much lower, because there's a lot of supply there between, 1160 and call it 12 and a quarter-ish. So, let it pull back, let it get a little bit oversold, and if you got to have it, well, then, that's when you start to nibble on it. Same thing with GM. GM's a little bit more wicked, from an extended standpoint. I see some good support at 34. Even better support at the 50-day, right around 33. So, plot your entries and let them come to you. And, if they come to you and you still want them and the climate still, looks halfway decent, then that's where you pick them off. But, why would you want to buy it up in here anyway? Kind of like the financials. I mean, can you really honestly say that you want to buy a Goldman Sachs up here?
No.
Where's support?
Yeah, and I'm looking on the XLF here, some consolidation as well here. And no, even though the market ripped yesterday, Bank of America and a few of those other issues did sell off. And, how much are rates going to go up? What's going to be the tone for the Fed? So it should be an interesting day later on at 2 o'clock. DC1 wants your thoughts on J&J. They just walked away for merger talks in Actelion. Boy, oh boy, Dennis was talking about the rotation, and J&J was definitely a beneficiary over here over the last few days. Give us your analysis of J&J.
Well, I like that talk. I mean, you got to look at it this way. Money stays in the market. It just rotates around. And usually it'll rotate, as always, out of the most extended, and it's looking for a new home. So, what Dennis said earlier about the pharma and things like that, I get that. So, but when you look at J&J, look what it did yesterday. Oh, you get some news comes out, and boom, there you go. It's like I talked about earlier. You get these gaps, and it's already up for 5 points. So, right now, it's kind of spiking. So, all right, well, maybe let the dust settle. It's that time of year. I don't really, I think, one would be more wise to send their thinking out to what happens first of the year. Because remember, the clock starts over first of the year.
What about the move like in the IBB here, since we are talking about, the rotation into pharma and whatnot, kind of the reversal with Trump here. I kind of like this chart here. Could you give us your thoughts on the IBB?
I like it. I like it a lot, actually. I mean, what's the? I was looking at a different one, but see, this is a nice one. See, this is exactly what I'm talking about. You get those big gaps up, and then what happens? For highs, you got a nice bull channel building here. If it can cross over the 50-day, line up your tops up the November highs. I kind of like it. Who else is in that group? How about Celgene, CELG?
Harlan,
Put those two charts together, and what do you get? You see the same thing. So I do like Celgene. I'm watching it. I think some of these bios, they've been beaten to a pulp, and now they're starting to wake up. Hence the rotation theme that Dennis was talking about.
Harlan, on that way up, when you were distributing the peanuts on the longs, did you get a chance to take a stab at any shorts?
No. That brings up a good question. There's a lot of peaks, a lot of trend channel resistance in a lot of the indexes. Believe it or not, the S&P is pegging trend channel resistance. Russell 2000 is also, but there's no top. It's just a peak. So let's take a look at what do you need to see? How do you know if a pullback, is going to fail? How about WOR? Let's talk about that. This is more of a what to watch out for going forward. If you take a look at Worthington Industries, WOR, same thing, hit a peak late November, pulled back, and then it started, there's your pullback, let's buy, right? But if you look at the pullback, you'll see that when it started to bounce, it bounced for 5, 6, maybe a week, and put in a little bear channel, and it broke to the downside. That's the what to watch out for. So if you start seeing things like that, where some of these high flyers where the air is really thin, they start pulling back, and then they make a rally attempt and they bounce, and that bounce fails, that's what you need to watch out for. You can buy the pullbacks, but you need to watch out for those little bear channels to form. Or you got to look for double tops. How about United Healthcare? You take a look at that, and same thing. It pulled back a little bit first of the month, started to bounce up from 156, got close to 162, and now it's kind of looking a little sloppy here. So who knows? Maybe it puts in a little double top in here and breaks its uptrend off the November lows to the downside. So, you got to ask yourself, what do you need to see to take a trade, be it on the long side and the short side? Those are your centering phrases before you take a trade. What do I need to see? What to watch for? What to watch out for? These are all questions you got to ask yourself before you take a trade.
Harlan, jumping over to Facebook here, because Facebook was so loved, and then Trump got in, and it's actually been hit a little bit since Trump has come in. It's starting to bounce here, though. Last week and a half here, Facebook significantly off the lows, kind of put in a little double bottom down there around the 114 area, and now it's starting to show some life here again. Do you think some money might start rotating back into the Facebooks and the Amazons and the Netflixes and the FANG of the world, Google?
Well, that's interesting you bring that up, because, when you look at those stocks and you look at the NASDAQ 100 yesterday, the NASDAQ 100 index, which has been lagging, finally broke out of a base into a new high. And guess who did it? It was Facebook, Google, Amazon, all the big tape painting stocks. I call them tape painters because they make up such a huge percentage of that index. Facebook is 3% of the NASDAQ. So, Google, I think, is 6%. Amazon is like 6%. And so you're already talking 15% of the NASDAQ 100 in just 3 stocks. I mean, you can paint the tape. You can push those 3 stocks up, and you're going to have a positive impact on the index. So, it doesn't surprise me that Facebook is, waking up, because it's one of those names that the high frequency trading, program trading, they run to. They're the go-to names when they want to push an index. I got no problem with Facebook here. Where's resistance? You can see it. It should just jump right out at you. right around 123.79, 124, because you got your early November peak there. Plus, that's where the 50-day moving average is. So maybe it could go there. So I got no real complaints with Facebook right here. If you own it, if it breaks 114 on that double bottom, like you so aptly mentioned, that's where you stop out. So what's your risk? Well, 120.31 to 114, call it 6 points of risk on $114 or $120 stock. So that's kind of where I see it. Does that mean it's going to 124? I don't know. I just know that's resistance. So if you're there,
Harlan,
you
before
might
we
be
let you
okay.
go, I want to just wrap up real quick. Before we let you go, do you have your crystal ball out there on your desk?
No, it's packed away for
because we have.
But go for it.
Okay, 2016, the Brexit, the big upset victory in the election here. Give me a theme, or give me a sector, or give me something to look for. 2017.
Oh gosh. Well, I think you have to at least reduce some of this, overbought, this euphoria, this let's come on back down to reality here and kind of look at, some things that are closer to support levels that are offering more of a lower risk entry point. So, I think you just got to draw your support lines and you know what, there's going to be a point in time in the next couple of months, you're probably going to do what we've done over the last couple of years. They spike these things and then guess what? Take a tennis ball and slam it to the ground. That's where, like the Brexit, the first of the year market sell-off we saw last year, and then into elections, it's akin to them taking a tennis ball and slamming it. What happens? When you take a tennis ball and you slam it to the ground, that's your buy point. And then what happens? That thing bounces right up over your head. So I'm going to use that analogy.
Okay.
And right now, the tennis ball just bounced up over your head. So let them slam the market. You can look at the Russell and you can say, where's support? 1250-ish. Where's support on the S&P? Short-term support, call it 2220. Do you really want to buy an index at 2271 into a holiday Santa rally after it's already ran right here? No. Just go look for your support levels out there and use them to your advantage.
Harlon Pine, founder of Amazing Power Patterns, wrapping up 2016 for us. Thanks a lot, Harlan. Get back out there on the street, get rid of some more of those peanuts.
All right, you guys have a good one. It's good to hear from you. I'm glad we got on before the end of the year.
All right.
Thanks, Harlan.
833, S&P's down $1.75. Dennis, he set us up perfectly on that one with his part.
Yeah, I mean, and that's what it is. When everybody is coming on, they're bullish, that's your cue that maybe to lighten up. And I mean, that's what we've seen. You know what'll happen? The banks will start, or if something, where we start to see some weakness, you'll start to see some bearishness come in. As everybody who just chases price, analysts chase price, your commentators on CNBC chase price. Everybody's always chasing price, and it works for a while. But eventually it stops working, and then they'll chase the price down as well. So you got to make your own. The biggest thing is you can't just listen to other people. There's no, even like Gil Morales was saying, there's no gurus out there. You can't just say, oh, this person knows what he's talking about. I'm going to do exactly what he says. I'm going to make money. It doesn't work. You've got to make your own, you've got to become your own trader. You've got to become your own investor. You've got to analyze the data for yourself. But all this stuff is just tools in your toolbox. And sentiment is a huge tool that I use. And when everybody's getting bullish something, that's my cue to lighten up. And it's maybe the contrarian in me. I know you're the same way, Joe. Maybe we're built contrarian. But at the same time, that's what tops form, when everybody is bullish.
All right. That was a fun segment with Harlan. Now we're going to bring on Tommy Lackey. He's managing partner and portfolio manager at Relativity Capital Advisors. We'll be right back with Tommy. Welcome back, traders and investors, to Benzinga's Pre-Market Prep. I'm your co-host, Joel Elkanan, along with Dennis Dick and Spencer Israel, and we have Tommy Lackey on the line, managing partner and portfolio manager at Relativity Capital Advisors. Good morning, Tommy.
Hey, guys. How's everybody doing today?
Doing good. Kind of coming down to the end of the year. Few more weeks here. Just let's go to the overall market, chugging along. I've noticed we've just been making new highs, just not by a little bit, by quite a bit, like S&P and stocks like Microsoft here. What kind of setups are you looking at here, especially with today's Fed decision awaiting?
Yeah, I mean, I think the markets overall have been performing well, obviously, and I think one of the big things everybody's been waiting for is the NASDAQ 100 to make new highs, which it finally did yesterday. Now we kind of see how it digests that, if it rejects it or if we can, play it through the end of the week. With the Fed, I kind of see as noise in the middle. I mean, it's certainly going to move the markets, but I believe it's a scenario to where, barring saying we do the same thing we did last year and just start to sell off as soon as they raise, I think that it's just going to kind of be a wiggle in the middle at this point, whether they raise rates or not. If they don't raise them, it's probably going to give things a quick jolt, and then we'll see how it's digested. Everybody's expecting them to raise them, but a quarter point's really not going to be the end of the world based on what we've seen the bond markets and things like that do. I actually believe, and I think I heard y'all talking about it maybe earlier, was that we might have the kind of the sell the news type thing here with financials and some of those other plays, and then also you may see rates come down a little bit, and things like the TLT and stuff like that might level up a little bit here after the news is out. No matter which way it goes, I think it could happen either way since we've seen stretches.
Tommy, I was on mute. Sorry about that. Want to jump into your individual stocks, jumping into your nitrous scan. Couple interesting ones in here. I've got a couple of these in my portfolio, but let's just jump over. This is one I do not have. Lululemon, LU is in your nitrous scan. Stock at the big move up on the earnings report. Starting to show a little bit of weakness there yesterday. You just get concerned if it gets into that gap area. But what are you seeing in LU?
Well, and that's what I put in my notes, is that basically this is kind of a look both ways play. If it holds here and it decides to move back higher, great. However, most of the options OI here, as we talked about last week, is starting to line up on the bearish side since those earnings came out. And yesterday there was a big buy of about 1,300 January 72.5 puts, so well in the money. So someone was willing to put out some premium betting this thing's going to head down. So I think that it probably heads into this gap. How far it gets, that's the next question, but I would say the first stop would probably be around the 65 area.
What, Dennis, hopping in here for a second. What a setup here. I can't believe you showed me this chart. Look at that gap between 60 and 68.
Contrarian Joel coming out.
Oh, my gosh. I mean, come on. You gapped up like there. You're just holding here. What's that low?
Yeah.
That low is 68 and a quarter. Man, oh, man. It's filling the gap. I'm keeping this one. I'm going to have this replace Twitter here on my top stock to watch. Because
you go out and buy puts.
Oh,
you wish they were open right now, don't you, Joel?
I go March.
Go out there
I'm going. I'm not going to
weeklies.
mess around with the weeklies. I'm going March. I don't care what the premium. I don't care what the offer is. Dennis, I'll give you.
Well, again,
Our bearish.
take a look at the ones I just suggested. Take the ones I just suggested got bought yesterday. January 72.5 puts. You could even go down to a March somewhere, like you said. So, yeah, I definitely think it's something that's worth taking a look at.
Hey, Des, go ahead there. I had to hop in on that chart.
Tesoro, TSO. I sold my Valero. I've had Valero in my portfolio for a while, you guys, because I always talk, when I'm picking them up. And I bought Valero back when everybody hated it. Again, my contrarian investing back at 53. I sold it. I think I almost got the top on this one. I sold it 69 just 2 days ago or 3 days ago there. So now I'm looking at Valero at 67.20. Obviously, Tesoro, same industry here. I'm looking at 4 highs in the same area. Not that weak, though. You can't really say this is weak until it starts giving back to 90. What's Tommy Lackey think of the Tesoro chart?
Well, that's kind of the same thing as I said. You look at the bottom of this little consolidation right here, and then you would probably lay off it there if you decided you wanted to try to buy before a breakout. See, if you look back on this on the weekly, you can see that this is right where it stopped in April. And so we've worked our way upside the right side of the space. And so the question is it working sideways to get some energy up to go through that, or do we get another rejection? So again, it's another one you could look both ways on. And with energy already have ran as far as it did, you do want to be cautious, not just because it's just down today, but just in general. But if it can break over that high, I do think it can have a pretty swift move from here. Very likely matching the one that got it here from 82 to 92. So maybe a 10-point move is potential.
Home Depot on your list. You know what? I bet it's been like a month since we've talked about Home Depot on the show, which is pretty incredible here. And Home Depot's had a nice run. 5 up days in a row here, running from 128 up to 136.54 closing out yesterday. What are you seeing in the HD chart?
Yeah, that's my downside on it. Is 5 up days in a row, you don't necessarily want to buy it thinking it's going to go straight up for another 4 or 5. However, you're looking at it right here, some pretty important highs as we get to the weekly chart. It's got a really nice base, and it's getting ready to move back into an RSI bull range on the weekly. So if this weekly holds up and we move sideways at all, I think this is the one you keep on the radar and try to find a small flag or something like that to trade against here over the next couple of weeks.
Dennis?
And
and I also
the old
mentioned
mute button again. I
Get
gotta
rid of
stop
that mute
muting
button.
Hang on, let me say one more thing on Home Depot. As I put in the notes, is there's also about almost 30,000 February 140 calls that were bought, which is almost, combined is over $3 million in premium, just on 11/30 and 12/1. So again, something to look at when you're seeing these runs happen. If you notice, those were bought right when this run started.
I like this, how you incorporate those big option buys now into your technical analysis. More tools in the Tommy toolbox. Netflix, NFLX also in the nitrous scan here. What are your thoughts?
Yeah, it showed relative strength last week when a lot of other things weren't. Now, it's moved sideways for a couple of days here now, but again, it's getting some bullish positioning on the option side as well. And I just really like the way it showed strength last week when no one else did. So it looks to me like it's kind of revving up for an internal breakout here of this small consolidation. It's going to send it up to those recent highs as well and give it an opportunity there.
RCL, Royal Caribbean here. That's had a nice run here too, just quietly, really for the last month and a half. Again, $69. Now up here at 85. Been a pretty incredible run here for RCL.
Yeah, two different stocks, but that and ALGN, two different industries and everything, but they're both consolidating above a recent breakout level. And that's something that's good to look for as well, because again, it gives you something kind of a double edge to trade against, which is that breakout level and the bottom of that particular consolidation. So when you can see that, it gives you a couple opportunities if it breaks higher from the consolidation.
Tommy, relative strength movers. I don't see anything in there, but let's go to the.
No, I have it's relative strength movers and those RF gainers, which is one side, and then the RF losers at the bottom.
All right, I like to do the meltdown. Let's do the meltdown here. There's only 2 in there. Oh man, we're getting another Tommy Lackey signal here. We're getting a lot of things in the buy scanners and not much in the sell scanners. And remember what happened last time, Tommy. FIVN, look both ways, but you're looking for possibly a failed breakdown.
Yeah, and this one has a nice candle pattern here, 3-candle pattern of a morning star. It's the volume was okay yesterday coming up, and then it's back above a couple moving averages and that recent low. Now, again, it can certainly fail from here, but it looks like it may actually be a mover back up into this consolidation.
All right, Mattel, the toy maker here. I remember when Hasbro had an incredible run. I don't know where that's at now. That's still up near its all-time highs, but not the same for Mattel.
No, Mattel's on the other side of it. It's on a big ledge that's worth watching. So from the downside, you got to watch that. However, it started to get some bullish call action on it as well as it stayed down here, and it's starting to hold. So it's one of those, I think, you have to look both ways, but one of the things I would say to you guys is that there's something you look at here as well, as you made the comment about there being a lot on the bullish and not as much on the bearish. Again, Lulu and some of those other players on the nitrous are actually downside plays. So you really got to be open-minded even on something like that to be looking at both sides of any of these. And something like Mattel, if it's getting these bullish calls after not participating here, people might actually flow into it or rotate into it a little bit if you do see a pullback in much of the other strength out there.
Yeah, great point you're making, because when you're scanning these, you're just letting us know what has been relatively strong and what has been relatively weak, but it's not necessarily you're saying those things are going to go higher here just because they've had relative strength. Sometimes those things can change course. So you got to look at it, with that open mind there. So speaking of relative strength, let's look at your relative strength gainers here. You got 3 stocks in there. I'm going to start with this one here. The 3D printing companies have not been talked about a lot, but they have quietly been coming back last 4 days, SSYS. Now, if you look at it 4 days ago, everybody hated 1740. Just kissed $20 yesterday. So Stratasys coming back here last week.
In this 1920 area has been important all year. It held up for a while there the first half of the year, and then it broke under it. And this is a little bit of a longer-term look on it, but it's another potential kind of a failed breakdown play. You saw back in early November, it looked like it was going to break down and move back above it real quickly, and that move failed. So I think as I put in my notes, one of these moves over 20 is going to work. The question is which one. And so you want to play something like this really tight because it has a lot of failures, but it does look like it's trying to shape up here again to see if it can actually get a reversal, and its on-balance volume is starting to improve as well.
Digital Realty Trust, DLR. This got a Kramer pump last night on Mad Money. If you're looking at trade up in the pre-market, Jim Kramer did mention this one as a bullish play, and we know Kramer still has a lot of influence. Whether you like him or not, he moves stocks around. So DLR is trading up 71 cents here off Kramer.
Yeah, and with or without that, it's a 5-month downtrend that's trying to reverse, and you can even see how it's over the last 2 months how these shots down have been consolidated out, and now starting to move higher. We made a set of higher lows and higher highs now, which is the first time we've done that since the first half of the year when it ran hard higher. So again, this is the same thing as some of the other rate hike type plays. As REITs got hit hard prior to this. Even if they do raise it a little bit, I still think these get some flow back once the actual event is over.
Here's a wild child. $300 stock in the scanner, Tommy. EQIX, which is Equinix. And this stock had a huge move yesterday, kissing up to 374, settling back down at 361. You trade these $300 stocks?
If I can, yes. And these are ones a lot of times you'll look at options. There's scenarios where a lot of times these higher priced stocks are going to give you much more stable moves once they start because so many less people trade them. And so that's why I think a lot of stocks these days don't split anymore. It's because they get more stable money because it's usually institutional money that's going to trade stocks with that kind of pricing. However, looking at it, this is one that comes against one that's a downtrend line. The big tail yesterday had to stop and look, but the volume footprint still looks pretty solid here, and it's about to get over all the MAs if it can clear that trend line. So this is another intermediate term kind of play I'd be looking at.
All right, Tommy, before we let you go here, taking a look at your relative strength losers. Let's start with LPLA.
LPLA, obviously the broker-dealer. It looks like it's come off the highs hard down to the 50-day moving average. It bounced off it quickly, but then it could not play off that bounce at all, and now it's heading back down for a retest. The second test is never as good as the first. Also bending the Bollinger Bands down as well. So I think this one probably heads down to close that gap in the 33 area, if not further.
Alexion sitting on a ledge, but the bad news is out. So careful here. Alexion, ALXN.
Yeah, they lost their CFO and CEO, I believe. Both resigned with some accounting stuff or whatever, I think. But most all that has been pushed, is out. It's in the news. And you saw some late day call buys, pretty sizable yesterday afternoon with 10 minutes left in the market. So, and they're in the 130 area. So I think I would be watching this one and seeing, A, if it breaks down, I'd probably be either really, really tight or make it prove itself, or B, see if you get a quick break below here and then a reversal back above that 110, 111 area.
Esteban wants to know what you think about AMD. Crazy call buying all year long. What's your take on AMD back in Double digits.
This happened with a couple of quite a few different semis in the low price area. MU was another one that they just pounded on all year, and it kept moving up, and it's still getting pounded on. I think it's one of those areas where obviously it's ran and it's extended and it can certainly pull back. But if you notice, a lot of those calls are in the March area, things like that. And so they're giving it plenty of time. So it depends on your time frame. If you're a longer time frame, I definitely think it has a good solid reversal. But if you're also a longer time frame, why not wait and let it pull back some and build you a little bit of a plateau or a ledge to trade against?
I think I had some $3 calls in AMD this year that went off the board worthless. They must have been early in the year. All right, Tommy Lackey Jr., managing partner and portfolio manager at Relativity Capital Advisors. Tommy, I don't know if we're going to get you back on here at the end of the year or not, but thanks for coming on, and we'll speak to you again soon.
Great. Hope everybody has a terrific holidays if I don't speak with y'all, and we'll talk in the new year.
Thanks, Tommy.
All right, I just missed a couple ones in the chat here, Dennis. Let's first take a look at Lilly because we had talked about the pharma here.
This one's setting up. And you know what? It's setting up to get in that gap area. Obviously, the big bad news on their drug, and now all of a sudden, it's starting to show some life with the rest of the pharma. I'd say you still got major resistance all the way. Call it, 69.14 was a high. I'll call it 70. That's going to be your resistive point. You can get above that big whole number of 70, then you start to get in the area where it's gap down from. I just don't know if I see it filling that gap or not. But it sets up. What are your thoughts?
I like it here. I like it. I mean, one thing that's interesting is the flush out day with the bad news turned out to be a big green bar. You went down to 64.18, and it never even really dipped under 66 here. So support's moving up. Anyone that had the shorts here, I think they're going to, take a little pressure. I like this here. And the thing I like about it the most is if you're buying it here, long term, let's say 68.5, 69. You have an outback down there at 64. I think any kind of treat, you're going to find buyers that kind of feel like they missed it. And you always like to see these gap fills. This could take a while to do. But do you have the yield now on Lilly?
3.03. And I'm sitting here because Lilly was always one of the core investments in my portfolio. It was the biggest position in my investment portfolio for years. I bought it back in 2011 and 2012, and I bought it back in the mid-30s because it was yielding over 5%. And I was, my whole thesis for that was, drugs were undervalued back then too. We were coming out, just a year or two past the financial crisis. You had, a lot of value in a lot of drug stocks. I bought Merck. That's when I really loaded up the drugs, and then just had that incredible run. 2014, 2015, 2016 just ran. I sold the last of my stock up at $85. Now, it was a little bit early, went over 90. But now I look at it here at 68, and you think, well, am I going to rebuy it? I've sold all of my stock a lot higher than these prices so I could get my position back. And then I analyze, I'm like, I don't know. There is, the drugs are cheap, and this is, where more fundamental analysis, which we don't do a lot on the show. Just Lilly is not one of the cheapest ones. Like a Gilead, I feel like is a lot cheaper than a Lilly. But Lilly has, a wild card. They still have that Alzheimer's drug, which is why it's sold off. It's still kicking around. There's still possibilities there. Great, pipeline overall. I mean, Lilly's, long term, I think you'll be fine if you bought it here at 68. I just, and I want to get the stock back. I just, for some reason, can't pull the trigger.
Not as long as a consolidation pattern is. This is only a few weeks, so.
And the yield only 3.03. It's not bad. That's typical. Merck is now 3% yield as well. Pfizer a little higher yield, 3.9%. Gilead yield 2.51. They're all in there. I mean, that's where the drugs, most of them are kicking around, is in the 2s and the 3s. I feel like there's better value out there than Lilly. That's the only thing. I like the setup on the chart. The chart looks pretty good. I just, for me, when I'm doing my investment, analysis there and I'm putting in my portfolio, I kind of look at the fundamentals. I kind of look at the valuation, kind of analyze, a little bit, and then look at the chart for the timing. I don't mind the timing on this one right now, but I just don't have the fundies down. So that's why I'm thinking I'm sitting on my hands still here on Lilly.
Fake breakout in AVGO, and it was funny when we had Gil on Monday. He was talking about the breakouts and how the institutions are buying on the cheap. Maybe they're buying more on the breakout to push their position higher. I mean, this one. I mean, you just want to see some follow through here through this double top, 181.90, 181.94. I mean, you just want to see it above 182 and just keep going. I think,
Yeah.
it falls into the gap area here. Big gap from that earnings day between 71.38 and 76.90. I mean, I'd give it maybe to 176. Give yourself a little bit of room here. But boy, seems to be putting in a hard top at the 182 level.
I have no comments on this one. This one's a tough chart to read. It has had a long period of consolidation, though, so if it could get back up there over 182, start making new all-time highs, I think I get bullish. A little bit concerning yesterday because it made the new all-time high and then peeled back significantly off of that, so 181.94. I only made it by 4 cents. And then you could say, oh, well, that matched, so now you start to run into trouble at 182, but I'm sitting on my hands on this one.
I'm not sure who asked that, but Brad, I would just keep an eye. I mean, we can give you those highs, 181.90, 181.94. Keep an eye on that all-time high mark of 179.44. That's more what the bigger players and the institutions are going to be looking at. So I would like to see, up day, down day. I want to see him improve on that all-time closing high, which is $2 off the high of the day. And what else we have? AKAO. You got something you want to add, Dennis?
No, AKAO. We can jump over to that. That thing's just crazy, though. That's been a crazy mover here again. Got all the way up over $16. I mean, this is a hard stock to trade. This is one that I can't trade. This is not in my wheelhouse. So I'll let you do the quick technicals. I mean, if you had to trade it, obviously look yesterday's high and say, okay, well, 16. That's where if it got back up there again, maybe you try it. But these things are wild.
Thing with when we see these kind of patterns and these kind of stocks is you just wait for the volume to taper off, right? All the day traders are in there. They're loving it. Big volume on Monday. We traded what? Boom, boom. 54 million and the big run up. You got the follow through yesterday, but only traded 40 million. So would be looking for, for it to go down at least, or another like Howard, look for some consolidation, see if the volume dries up here. But nice 2-day run, and I believe there was some fundamental news here that did that. Dennis, since you said you can't believe the market's not down more, we fell about 3 S&P handles down to 64.75. Fed decision awaits today. Any particular strategies you're looking at?
Again, there's going to be rotation. It's clear here this morning that financials are relatively weak. Oil is relatively weak. Financials definitely taking it on the chin here. And, you're seeing GM and Ford. I'm looking at the Ford still as a buying opportunity here. I know Harlon was saying down at 12. I'm not sure you're going to get a shot down at 12. It's already rallied here a little bit in the pre-market here. GM is coming back here, too. I'm looking at both of these, these pullbacks here. I wish I would have pulled the trigger probably a half an hour ago because I don't know if you're going to get a shot down there at 36 on GM again. I don't know if you're going to get a shot at 12.50 again on Ford, but if it does get back down there, I might take a shot on Ford there, just as a healthy pullback there, and as a short-term, maybe 50% retracement of the recent move type of trade. So I like the pullbacks here in Ford and GM this morning, and I might try them for bounces.
Boy, I would say 36.48 at GM. I want to say a lunch bet on 36, but I don't know.
You're saying it closes below 36?
No, I think it sees 36 today.
I could see 36. It's only 40 cents away. I think it closes. I'll throw a lunch bet out here for you. I just paid you once, so I only owe you one lunch now because I took you out for lunch there yesterday. But I'm going to say GM closes above. Oh, this is a tough call because there's all these wild cards with the news. But I'm going to say GM closes above where 36.35, right, where it's just trading.
I just traded 41.
I grabbed the low tech. It's offered 39. Now I don't. You know what? But GM isn't the one I want. I wanted Ford. So
okay.
You're pulling me away.
Okay.
So I say Ford closes above. I think Ford. I want.
No, Ford's different because there's going to be buys that. So this is a paper lunch.
Yeah,
trade.
I'm going to be one of them.
Paper lunch trade on this one. No official, but
Paper lunch. Yeah, how about paper lunch trade?
that means I'll bring a brown bag. I'll bring a sandwich from home
Okay,
for you.
paper lunch trade.
Okay, 9 a.m. Time to wrap things up. Preview Thursday's show.
Thanks a lot, guys. Tomorrow we got a couple of guests on. Tracy Schuckart, she's a trader. She's been a trader for many, many years. She will join us as well as Adam Sarhan. So looking forward to Tracy and Adam on tomorrow's show. And if you missed any part of the whole show today, you can catch again on our podcast on YouTube, iTunes, SoundCloud, or Stitcher. Just search for PreMarket. Don't forget, if you want a free 2-week trial of Benzinga Pro, it's Benzinga's real-time news platform. You can call us up at 313-723-2000 or go to pro.benzinga.com and to get a free 2-week trial and check out the platform. You can also call us up or email me, Spencer Israel at benzinga.com, if you want a demo or anything like that regarding Benzinga Pro. It's what we use during the show, so check that out. And that's it for us today. So please remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. And we're going to leave you now, so hope everybody has had a good morning so far, and good luck today, and let's watch that Fed meeting together, and we'll be back with you on Thursday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.